Hey, everybody.
Hold on. He's about to set it up now.
All right, I see us all online. I can see it.
Okay.
Gotcha.
All right. We're going to give everyone just a second to log on and then we will get started. Let me see how I can share this to my page. Let's see. Let's see if I can tell. We can get started with everyone. We got 5 viewers so far. That's awesome. We'll give everybody a few more seconds to get on board. So everyone, happy Martin Luther King Day. This has been a brand new year to 2021. And I know a lot of people are used to me doing Money Mondays. And it just seems like in 2020 with the pandemic and all the stuff that's been going on. And I have tons of friends that were all going live and it seems like we were all doing things at the same time. And I just kind of stepped away and I said in 2021, I wanted to come back with new information, some new people, some things that we all need to try and help us understand how money works. And so one of the best things about what I do is that I come across people on a regular basis and we're like-minded. We're trying to find different ways that we can build together. We're trying to find ways to help navigate through a lot of these times that we weren't planning for. So I hate that there's been so many people that have been displaced when it comes to money. Jobs have been changed. I don't think any of us could have said even a year ago this time in January that we would be where we are now, wearing masks and having to Lysol everything up. So one of the things that hurts us as a community is not understanding how money works. And so one of the things that was important to me, Righteous and I became friends basically through Facebook. This has been a great platform. And then I got to meet Anthony as well. And we are all trying to get information to you to help you understand how to do the best that you can with what you have. So a lot of the things that we talk about that we have plans for, we want to buy homes, we want to, own our cars. And, I've been doing this for many, many years. We're not planning for it. So I wanted to put some stuff together. We're gonna have you guys, answer some questions later on. We got some free prizes for you. I haven't had any prizes in a while, so there's some good ones coming. But we're gonna have a real candid conversation about how money works. And I'm going to let them introduce themselves directly so they can give you a little bit more background and information because I'll just talk y'all to death. But I have righteous.allah and I have Anthony Dennis, and I'm so glad that they took the time to meet with you all to bring you this information. So I appreciate you both. And I guess I'll start with Righteous. Tell us about yourself.
Thank you. I keep it simple. My name is righteous.allah. I'm a financial literacy educator with WealthWave and also Legacy Builders Financial Solutions. And what I do is I teach people how money works.
Mm-hmm.
Oh, wow. Righteous always keeps it so simple. It puts pressure on me every time. What's going on, everybody? My name is Anthony Dennis, just as Righteous with WealthWave. We're financial education educators. The big thing for us, our passion is just helping families win financially. And that's what we do. We do it here in Hampton Roads, Carolina. There's no jurisdiction. We want to be there. We want to help you and your family win.
I find this awesome because when we all do these different meetings, it's like we're individually doing the same thing. So it's like it just made sense to bring you guys on the Cousin Kera platform so that you could just help in one big swoop, because individually I can't do it alone, you can't do it alone. So this is something that's pretty cool that we can continue to build. And there's this awesome book. And it gets stolen from me. So what happens is I have this book, and if I leave it sitting around, they kind of get legs and they walk away. So I'm going to tell you guys the title. You're going to love it. It's called Stop Being a Sucker. And so the title itself, when I saw that, I was like, that is so on point, so direct. Like one of the things that grabbed my attention was that there's so many things that we don't actually know about money and about credit. And those are the pitfalls that I think we all fall in somewhere down the line. So this is a way to do a great introduction on what we think we can help. So how money works, stop being a sucker. What are your thoughts on that, Righteous?
Well, A sucker is a gullible person or easily deceived person. Oftentimes, the sucker is ignorant to the things they fall victim to. Now, have you ever noticed that whenever you go into a bank or a financial institution, they have suckers there? Now,
Yes, they do.
yeah, more than likely, they'll give you them suckers in order to be generous. But we look at it as symbolism of the sucker cycle, because financial literacy often traps people in a sucker cycle, often for life. The sucker gets a paycheck. And instead of them putting their money to work for them, what they do is they hand it back to someone else that then builds wealth with the sucker's money.
Absolutely. Absolutely. And it's so blunt, it's so to the point of what it is, but we try to, I love my Christian following of people I have. So I'd always try to, soften it up, but sometimes we need that smack in the face. Like, this is real talk. This is about your money. You work hard for it. You should know where it's going. You should make sure that you have all these things coming down your path. But I mean, I just want you guys to take a moment and explain to everyone watching exactly what you do. So the book is a part of it, but tell me exactly what you do.
Oh, well, yeah. I mean, we really do our best to keep it simple. We don't want to overcomplicate it. We believe that we make something complicated, it just really makes it hard for people to execute or just try to see the vision of what we have going on. So as we said before, with How Money Works Educators, and we help families put together plans that shows them how to build wealth, importantly, protect that wealth, protect their health. And for those who are, we'll say, a little bit ambitious, we'll show them how they can generate another stream of income that will allow them to go after those dreams and goals that unfortunately they've had to kind of put to the side. When sitting with our clients, we kind of walk them through a process we call the 7 money milestones.
Mm-hmm. So the 7 money milestones, briefly give me an idea of what exactly you mean by that, because that was the whole purpose of us doing this today on Monday, was so we could teach the 7 money milestones. And right. I want everyone to pay close attention to this, because I feel like these are the things that are missing, and you're about to give us those missing pieces. I got a pen, so y'all.
Well, 7 money milestones is a roadmap to financial security and also financial independence. Me and Anthony are guides, and what we do is we help people through their financial journey. Now, we know that there is twists, turns, also setbacks, but we are here just to help. Now, the objective of the How Money Works book is to help with understanding key concepts to give us solid financial education. Now, the 7 money milestones goes as such: financial literacy, proper protection, emergency funds, debt management, cash flow, wealth building, and wealth protection. Now, me and Anthony worked very closely, and Anthony brought it to my attention that they should have added another milestone, which is called 1.5. Anthony, you want to explain that to him? Yeah,
and we say 1.5 kind of joking a little bit, but I always ask a question, especially when I'm sitting with a client. When you sit down, you're building a house. What's the most important part of building a house? 9 times out of 10, everyone says it's the foundation, right? And I tell them, well, you're close, because that's what everybody thinks. But actually, the most important part of building a house is the blueprints that it takes to build the house. That's where you go, the material, the location, all that goes within the blueprint. So the 1.5 that we talk about is your budget. So when it goes to building your financial future, whether it's you want to become extremely wealthy, get out of debt, no matter what the case is, the most important part is starting that process and putting together a budget, because that way you're now controlling the current of your currency, and you're kind of telling your money what it's going to do and how it's going to do and how it's going to behave, instead of getting paid and running where your money went.
I understand that. Now, when we're talking about milestones, the first milestone that we're talking about, I guess, circles back to what's at my heart and why I have Money Mondays to begin with, is financial literacy. Can you give me your thoughts on what that means to you?
I'll take this one, right? Just sure, Kera. One thing I always like to do is I like to define what financial literacy is, right? So financial literacy is the understanding of how to earn, spend, save, and invest money. Those who are financially literate understand, and most importantly, they can apply to their lives. But the lack of financial literacy is the opposite. You know, and then over our time in my time in business, I've had the privilege of just noticing people and meeting a lot of people. Unfortunately, I've met a lot of people who know how to spend, but don't know how to save.
Right.
It's one thing we're taught as children. We're taught how to make money and spend money, but it's very rare that we're taught how to save money. It's sad, and I believe hopefully I'm quoting them correctly. With Dennis Kimbrough, the great thing about the first milestone, which is the book, he says prosperity begins in the mind, and then it ends in the purse. And I like to tie it in with education. You have to learn about what we're doing, learn about money, and then apply what you learn so your purse grows. But that is true to the opposite. If you don't learn about money and you don't apply what you've learned, then you're going to wonder where you have that butterfly and the moth coming out your pocket when you turn that pocket inside out. So, yes.
It's truly important. The conversations that I have on a regular basis it's usually backwards, which is why this is so important to me. So when we're talking about this book, why do you think this book will help people? I know why I think it is, but I'm interested to see what your thoughts is on it, because I immediately I didn't put it down. As soon as you first gave it to me, I was just like already through it just real quick, but
awesome.
Give your reason behind why you think it would help people.
I got you. Now, when it comes to in the financial industry, it's common knowledge that financial literacy is the #1 economic crisis in the world. Now, financial literacy is knowing how money works, and that means understanding how to earn, spend, save, manage, and also invest your money. Now, having a strong understanding of financial literacy will allow you to make better decisions that hopefully will improve your day-to-day life. So that's why we pretty much think that the book is simple enough in order to help a person to understand these particular concepts of financial literacy.
When I read it, I was just sitting here like it just made the term simple to follow. So those were the things when I was looking at it, like anybody can pick this book up that does not have that business class background, and it just wasn't your thing, and literally read through this book in the best of terms and leave with it with some knowledge and information. So I'm a fan. Now, you touched on it, Anthony, a little bit earlier when we were talking about the milestones. So the second one is proper protection. Tell me what that looks like, because literally these are things, and Righteous, you and I have had the conversation before where we talk about, the different things when you're growing up and our grandparents practice it, and I almost feel like we got away from it for a little while. And so I want you to give us some information on what that looks like as well, because I just remember in the 70s, it was so different. And now here we are in 2021. Let's remind everybody what that is.
Okay, I got this. Let me take this, Anthony. Well, okay. It was once said that the protection of a man's person is more sacred than the protection of property. Now, we know that self-preservation is the key to life, but here's the thing. You might not be able to fully protect yourself from illness or accidents, but you can protect your income and your wealth. Now, ironically, the protection of your financial assets is called life insurance.
That's important. So I'm just sitting here thinking, like, what, besides the life insurance, what are the other types of insurance that would be helpful as well?
Well, we have temporary and permanent. Okay. But why the second milestone is because with the right insurance product, and if it's properly structured, it can be used to help you, especially in old age and retirement. And also, it can bring your family a peace of mind through leaving behind a legacy to help them to cope if something was to happen to you. Right. Like I said before, we have two types of insurance. Now, here's the thing. Some people might already have insurance, but I have a few questions for them. When was the last time you had a review? Do you even know if you have enough insurance? Or do you know how much insurance you should have? The rule of thumb, you should have at least 10 times your annual income. Now, what that means, if you make $50,000, you should have $500,000 in life insurance. Anthony, do you want to explain to them the difference between temporary and permanent?
Yeah. Think of temporary, because permanent is always kind of easy to explain. Right? It's kind of self-explanatory, but think of temporary like you're renting an apartment.
Mhm.
All right. So you got the lease, and the lease says you're going to rent it from the next 12 months. At the end of the 12 months, you have two choices. You can decide to keep the apartment, or you can decide to move on. Either decision, the apartment complex will be obliged or be happy to help you. So if you decide to move on, they're like, well, thank you for your time. We appreciate you staying, go about your business or go about your way. Well, if you decide to stay, they say, well, that's amazing. We're glad you want to stay with us and we appreciate your patronage. But to stay, cost of living is going up, inflation. So we may have to bump that up by another 15, 20%, that rent. Well, term insurance is kind of the same thing. Now, all insurance is based on insurable need, or I won't say insurable need, I'll say the cost of insurance, what it will take to insure your person.
Mm-hmm.
So if with term insurance is anywhere between 10, 15, 20, between 10 and 30 years, depending on the policy. What happens is at that time, say if you got it at 20 years old, we'll go up, we'll say 29 years old. You got the term policy for 30 years. Well, 29, you're at 59 years old when that policy expires. Just like an apartment complex, they'll say, great, well, Mr. or Mrs., you have two choices. Would you like to continue your policy, or would you like to just get ahead and let your policy lapse at this point? If you decide to let your policy lapse, they'll say, well, thank you. We're happy to serve you. And all the money you've invested into that for the 30 years, it's gone. Now, I'll put this caveat in there. Some term policies have what's called a return on premium rider. That's a story for another day, but it is a way to get some of that money back. The second part of it is you decide, yes, of course, I want to continue it. I don't have an issue with it. That'll be great. Let's reassess your health, your age, how you living, any medicines, any physical conditions, any illnesses. And because we all know, everybody don't have that Benjamin Button disease, so we all gonna get older and our body's gonna break down a little bit. It's just nature. Well, when they reassess you, that low amount you've been paying in premium for a term policy is gonna shoot up. So if you're paying $50, you can best believe you're gonna see upwards to probably $300,000 or $300 or more a month compared to what you've been paying. Why? Because when you was 29, they looked at you and said, hey, you're healthy, things look good, your person's fine, so it doesn't cost that much to insure you. But when you get older, they're like, it's going to cost us a lot more to take care of you now. So the chances are likely you possibly going to pass away sooner than you were when you're 29. So it costs more. Now, on the flip side, with permanent insurance, it's kind of, you probably heard in terms of like whole life.
Right.
Whatever premium you're paying when you start is a premium you pay for the whole life. Now, there are different kind of nuances, and again, that's another story for another day. But pretty much for whole life, you're paying for the life of the loan, or for your whole life. You pay the same premium throughout the whole time. Doesn't matter the years. Term is generally a year designation, so anywhere between 5, 10, up to 30 years.
Okay. This is all just so interesting to me because I'm on like autopilot to automatically do that because that was a big deal growing up in my household. So this is something that I think my mother would probably come sock me in my eye if I didn't have some of these things in order. So it has to be spoke about in the household. These are the reasons that we do this, is so that it's something that we teach. And then my children are still in their 20s. And so it's a conversation that's coming up because when you're young, don't think anything ever is going to happen. And if last year didn't teach us anything, it's that to expect the unexpected. Now, the next important part, which I feel like is, to me, out of the milestones, based on everything we've been through the last, couple of months, we're pushing a year now, is the third milestone, which is emergency funds. And so when I think about emergency funds, in your opinion, Righteous, what would be an amount that you would consider if you were just, talking with me or something, that would be a good amount for an emergency fund.
Okay, I would say that a person should save between 3 to 6 months worth of income into a savings account.
Mm-hmm.
Now, we know that even the people that is the best at budgeting will eventually face an unexpected financial blow. Now, the people that actually listen to me, Anthony, you, Ms. Kera, they was actually prepared when COVID hit. Now,
Right.
the ones that didn't, they was the ones that needed the stimulus checks. They're the ones that needed the unemployment checks because they wasn't prepared. Now, we here now, but like I said, the industry experts say that 3 to 6 months is sufficient. Now, I'll say this. If you didn't do it before, start now. By making your goal at least 2 weeks of pay in your bank account, then build upon it 1 month until you get to the 6 months.
Right.
So just start.
It's always a start. And Anthony, you had mentioned that there's 2 types of emergency funds when we had a conversation before. So let me pick your brains as to the 2 types.
Right. Well, I'll kind of have to go back a little bit. So what kind of started this whole financial journey for me is I took a course called Financial Peace University, created by Dave Ramsey. It's an awesome program. Well, so the emergency fund, I kind of took it from him. And there are 2 types. One is your starter or your beginner emergency fund. Is when I want to start you off with $1,000. All right, we want to get $1,000 as quickly as possible. There's over 60% of Americans out there that have less than $500 in savings right now.
Right.
So, I mean, and believe it or not, depending on the vehicle, that's the cost of 4 tires is more than that. Right. So we're going to try to, so our goal is to start you off with $1,000. Get $1,000 as quickly as possible. Just like Roger said, it doesn't matter when you get started. The most important thing is that you get started. Right. Now, depending on your financial goals, generally we kind of go after the debt after that. But in the event that that's not your goal, we want to just keep saving, want to build up as quickly as possible. Then we work our way towards the 3 to 6 months. So with me, if I have a client and it's maybe single or just getting married and they're kind of starting their financial journey, I shoot for the $1,000. But they're married with children, they have a home, I try to say your starter, let it be at least $2,000. That's a solid cushion in my opinion. So if something was to happen, something happened in the house or things like that, you have something set in place for the house. And then we go after those other goals, and then we go and attack it and go right to 3 to 6 months. It's easy to get to 3 to 6 months when you have nothing else pulling money out your pocket, minus your mortgage, of course.
Mm-hmm. One of the things that I think I run into on a regular basis dealing with helping people with car loans is that the car would break down. It needs an engine, it needs the transmission, and we don't always have a warranty left. And then we force ourselves into more debt because we're like, let me get rid of it and I'll just get a newer car because we didn't have the emergency money set aside to take care of it. And then there was still a car payment. And so I feel like debt is the biggest, obstacle when it comes to trying to save, is that these things just come. It seems like as soon as you finish paying your car off, y'all know that's when the check engine light comes on. As soon as you feel like you've gotten in a good place, then here comes debt knocking on your door. Like, okay, you thought you was going to sleep peacefully. Let me throw this on top real quick and see how you figure that out. So,
but you know what, Carolyn, I'm going to cut you off real quick. This is what I come to realize in my time within myself and my home, as well as some of my clients. As that emergency fund is built, you'll be surprised how many emergencies you actually have when you have an emergency fund.
Yeah, I can see. Yeah.
And, and everybody here, Murphy's Law, what will happen? We already know the saying. And we all know one day it's going to rain, so we should have an umbrella somewhere. Your umbrella is your emergency fund. But when you don't have an emergency fund, things happen. Like Murphy has taken up residence in your apartment, in your car, in your relationship. That's a whole nother conversation right there. My mentor, Mr. John Epstein, tell you all the time, money will hurt the relationship. So in your relationship, but when you have that protection, it's nothing but a protection for you and your family for that just in case stuff. I tell you what, you have to get an emergency fund. It's the start of everything.
look, the way we're talking, we got a whole bunch of Mondays coming up in 2021. If we got to break them all down, we could do that
Right.
as well, because I almost, on a regular basis, I'm constantly trying to help and talk to people, but it's like, how do you guys help? I'm going to ask you this, Righteous. How do you help people with debt management? Because I know we all have bills. So what would that look like if somebody came and said, help me with my debt management?
What we do is we pretty much sit them down in order to evaluate their life to actually see where they're at in their life before we can then offer them a solution, because we know that debt is the greatest obstacle to a sound financial future and becoming financially independent. Now, that is the sweeping crisis of this society. Why? Because of instant gratification. Whenever we talk to people about, trying to help them to get out of debt, they are thinking about being able to buy a car, a house, things like that. You know what I'm saying? You know what I'm saying? When you have all of this particular debt, if you tackle the debt, then everything else that you want will then come eventually. Now, the single most debts are student loans and credit card debt. Now, why? Because millennials, most people don't know that the millennials are a very educated generation. But here is the thing. They had to suffer 9/11. They have to suffer the current pandemic. So what is happening is there's not a lot of jobs, or if they are taking a job, they're taking jobs outside of their field. Right. So they're actually making less money, which is causing them to rack up student loans, or not to be able to pay the minimum payment of the student loans. Then you also have the people that have this astronomical debt when it comes to credit cards. Why? Because of instant gratification. They didn't have an emergency fund, so they're using their credit card as an emergency fund. Now, we also know that 80% of Americans are in debt from credit cards, and 68% are in debt from student loans, and most aren't even making the minimum payment. I know that with you, Ms. Kera, you actually are helping people with student loans also, as me and Anthony. But here's the thing. People have the resources between all of us, but they're not reaching out to us so that we can then help them with this student loan debt and to be able to lower their monthly payments.
Right. I tell you one, now I'll say this over and over again. And knowledge is not power. It's the application of it that makes it powerful.
100%.
Right? Let's keep that in mind. And when we're talking about debt, Righteous know how I feel about that. He knows how I feel about that. I don't like using the word hate very much, but in this case, I'm going to say it. All right, I hate debt. All right, I see debt as legalized slavery or bondage.
Okay.
All right, someone always has their hand in your pocket, and then when you don't understand how money works, you don't really understand how debt how it's working against you. Now, you'll have others that say they leverage that to build wealth. And so with that being said, I'm not completely against doing that. I always say, if you're going to go that direction with it, where you're going to leverage that to build wealth, make sure you're disciplined in your finances. A lot of my clients will say, I need 3 or 4 credit cards. I got to build my credit score. But then they're just setting themselves up because they're getting, one for 500, one for 1,000, one for 1,500, whatever the case may be. And they're spending these cards, but they don't really understand what they're doing. So they're spending, and now they're adding debt because they don't realize credit cards aren't free, right? It's borrowed money. It's just like a loan. They say, hey, I'll give you this, but I want my money back. And when you give it back, I'm going to just tack on a little bit of interest on there just so I can, make some money off the money that I've given you. And so I always talk about when you want to leverage debt, which is okay, just make sure you're disciplined in your finances. This is why I always go back to that baby step 1.5, which is your budget.
Right.
And I don't want to think I'm a hypocrite. Me and my wife, we leverage that. We have a credit card that we leverage, but we use it to build the credit. We don't use it to maintain our home. So it's not our emergency. Credit card is not your emergency fund. You should become your emergency fund.
I love that. That's 100, because one of the things that when I'm talking with people, it's almost like we look at it as free money, and these cards are set up with fees that if you are
Mm-hmm.
1 day late, your payment might be 25, but the late payment is 35. So now
Mm-hmm.
just went into a hole, and they want you to be late. So they don't always send you the reminders like you would maybe need the reminders. So
Right.
the more you're late, the more they make. So I think this has been awesome. For anyone that's joining late, we're going to take a brief intermission, and I want to look through all the comments. If you have something that you want to know, I want to make sure that I connect Righteous and make sure that Anthony can speak to you and answer some of these questions for you directly. One of the things that we're going to do is we have gifts, and so you guys know if I find a way to get something to you that's helpful, then this is what the gift is. And I'm like, I don't have it with me because I keep giving mine away, so I want to give this away. It's this book. When you guys get a hold of this book, we're gonna put some stuff in the chat. I don't know if you can help me see that, Righteous, in there, but I want to make this fun. I want at least, can I give away 3 books, guys?
Yes.
Yeah. Yeah.
Okay.
Definitely.
Look,
Definitely.
I'm just giving stuff away. Let me see if I
Definitely give away 3 books. Let's do it.
The cool part is that I truly believe in this book because it literally has like all the information that you need. And when people ask me about it, and I say, you know what, you'll come away with it learning so much more on a basic level. So it's just broken down so perfectly. So we're going to find a way by the end of this event to make sure that 3 people that are tuned in, logged in, get this book, and you can you're going to get a inbox from me so that I can get the address and information and get it to you, because I love this book. And then you had to give 4 away because I think someone swiped my last one. So we got
for you, Kera, we got you.
You got me.
We got you.
And I remember I have some friends at Hendrick, and literally he has to hold it, and because people just see the title and they just like come by, and he's like, they try and take my book. And so he's been reading it at the dealership, and I love it. But we're going to make sure that we get some more information out there for everyone so that you learn. The purpose of doing this on Mondays was, and I've been calling it Money Monday, and then all of a sudden it went national. All these different people are doing it. I've been doing this for years, but I left. And so I'm back now. We've got some information for anyone that tuned in late. I'm just going to catch you up really quick. I have righteous.allah and I have Anthony Dennis. And I'm trying to make sure that I get all the information I can to you in 2021. I was asleep in 2020. I'm awake again. We are going to collectively, as a community, try and help each other. I think that's one of the things that's missing. When I watch the news and the events, and I'm thinking, how can I help? How can I contribute? And it's really person to person, just trying to get information to you so that you all leave with knowledge so you're in a better place. And as we talk about financial literacy, one of the things a lot of people know that I also work with a nonprofit is we call it financial security. So you're secure, you get the literacy, and then you're secure with your finances because you understand. It's so hard to navigate through something when you have not a clue behind the scenes. And Anthony, you always have great like pieces that you give me, these nuggets. And one of my pieces is that I feel like when I'm doing business, if I'm playing checkers and they're playing chess, they're going to win.
Mm-hmm.
They're going to beat me every time because I'm on the wrong game. I'm down here thinking this is all fun and this is nice. And they've got it all plot and planned before we even walk into the door. So I like evening the playing field. So,
I'm gonna steal that one, Kera. I'm stealing that one. Stealing that one.
Go right ahead, because I've already stolen some of yours, so I'm good with that. And one of the cool things, like Righteous, we were just friends on Facebook, and I would post stuff, and I have a lot of friends, right? And you were like the only one that was getting it. And this was years back. Like we've been friends for years. And I'm like, somebody gets it. Somebody gets it. And then as we really got to talk and you know someone, you're like, oh, you get it because you're trying to help people just like I am. So that was like so cool because I was constantly going live with stuff. We've been talking about interest rates and we've been talking about all these things through the years. And I was like, he actually gets it. So now that I have you too, Anthony, I'll just be bugging both of you because there's times where we have to continue this message. And again, I'm apologize to y'all for 2020 because I literally I just not have it in me to get on live every single Monday. And I said, I need to make that a commitment myself to come back to bring this information out there. It's been some years. It's been some years. And I feel like games are changing as we are even speaking now. We're looking at the 20th, there's going to be some changes. We talked about student loan debt, and let's all cross fingers that they make some changes and erase some of it. I'll take 10 grand. If it's 10 grand, that would be wonderful for, a lot of people. If they can do the whole thing, even better. But our world is changing right in front of us, and I think we're behind. And so I appreciate.
Let's put a moment of silence down for 10 grand, please. Let's put a moment of silence down for 10 grand.
Fist up for it. Put my fist up for that.
Oh my goodness. Oh my goodness.
So you guys, I can't tell you how much I appreciate the time that you're taking to break all of this information down, to make sure that everybody has everything that they're looking for. I mean, I'm trying to sit here and find ways to try and get people to interact. And it's hard because of the way it's set up. I can't always answer things. And I know there's some stuff in the chat boxes I'm gonna try as you guys are giving some more information when we come back to it. How can I do this game? I have a number in my head right now. I have a number in my head, and I'm gonna say it's between 1 and 50. I turned 50 last year, so I'm gonna just say 1 and 50. I'm gonna write my little number down. And I want people to go in the chat and just list what number they think I'm thinking, so that we can at least pick our winners on the people that get the closest in order, because I don't know the order of it. So whoever can get in there the fastest, and I'll go ahead and review that. But I want to make sure that we get a little bit deeper. So we're going to come back into, and we're going to get a little bit deeper. And one of the things that I heard both of you mention in different parts was my favorite, cash flow. So, what is cash flow, right? Just like when I know what I consider cash flow, but I want to hear your version of cash flow.
Well, cash flow is money you have available to spend and to save after practicing the previous milestones. Now, the key to cash flow is examining, managing, and also reducing your expenses. Mm-hmm. Now, there are 3 practical ways or practical options that you can make more cash flow. We're in the era of the gig economy. Mm-hmm. People are like, what is the gig economy? There's like Uber, DoorDash, Instacart. That is ways that you can make more money. If you got the time, drive for Uber or Lyft. Then you can make extra money as an independent contractor. You can also start your own business part-time. I've seen a lot of people that use COVID as a way in order to generate more money. I've seen people make novelty cups. I've seen people make masks. I've seen people that make t-shirts. They're using their time wisely. Now, you also can adjust your W-2 allowances. Now, I'm gonna say this. I'm not a tax professional, so consult your tax advisor. But I do know.
They know I got some of those too. I have some awesome friends that everything you mentioned, they make earrings, they make cups, they do shirt businesses. I have all of that in the taxes. So you hit it on the head when you said that.
They can get more money on their paycheck and also their refund check. But like I said, consult with your tax advisor before making this change, because they can give you the better advice.
Now, let me ask you this. Can you explain why it's so important, Anthony, for them to do this? Like, give me some nuggets on that. I know you have them.
All right, I'm going to take all my nuggets. Well, just think about this. You as children, we dream. At that time, we're dreaming big.
Right.
Our goals and our ambitions are, sky. We're talking about the galaxy is our limit. And as we get older, it's like we're kind of being brought closer and closer and closer and closer and closer to Earth. And so, after we finish work, after we finish college, for those who just finish high school, just start working, what a lot of people don't realize is, well, your salary or your hourly wage is, well, that's your ceiling.
Yeah.
You know, you really can't out earn what someone's willing to pay you. One thing one of my mentors always say is, they don't pay the person, they pay the position.
Right.
All right. So when it comes to increasing your cash flow, you have to kind of think of it or go at it with the mindset is, I'm going after my dreams and my goals again. I'm not going to allow, even though I'm working for you now, this is not going to be my end. That's not going to be the end of my story. But before you go after cash flow, it takes us all the way back to the beginning. What's milestone 1.5? It's back to the budget. Right. Right, you have to go back to the budget. As Righteous said, one of the first ways to notice where your cash flow is coming from is looking at what's coming already in the home. You start to weigh what you have coming in versus what you have going out. Now, what you have left over, that's your cash flow. Just so everybody have a clear picture of what that is. You take your income minus your expenses. What's left is your cash flow. Now, how you increase that is in a variety of ways. One way that Righteous did already alluded to was by adjusting your W-2s with your job. Again, I'll put that claimer out there. We're not tax preparers, but I know it's possible. Sit with someone who knows what they're talking about, what they're doing, who can guide you in the right direction, but you can maybe claim a little more and bring a little more home. The other way is going out there and finding a part-time job. A lot of people are out there doing that, you know, McDonald's, Walmart, just side hustles. It's not Pizza Hut driver. This is not their full-time gig, but they're just trying to make a little extra money. A lot of people are going into the gig era, I just mentioned before, Lyft, the Uber, DoorDash, Uber Eats, all that good stuff, a way to bring in some extra hustles. And a lot of people also doing what we went out and did, when we became entrepreneurs. And we started finding ways to generate more income by, you know, making money other ways. Now, caveat, one thing my tax preparer tells me, shout out to 360 Tax, Tax Phyllis is the best, is the taxes are built for entrepreneurs, for self-employed. It's made for you to have a business. Go get you a business. There's so many ways, so many deductions out there for you for just having a business that people don't know about. And once again, shout out to Phyllis because she takes care of me every year. So, as I was saying before, we start off with your budget, looking at what you have coming in, but then look at what's out there for you. I remember your salary and your hourly wage is someone's ceiling that they put on you. You can rip that bad boy off and go out there and go back to making Galaxy the limit again, because by bringing in more money, you can go after those dreams and goals that you had to put under the table or put on the table or just to the side because you had to take care of life. So that's why increasing your cash flow is so important, because it allows you to go back after those things that you had to put down because you had to take care of other things.
There's so many examples of that. One of my friends, I don't know if she's watching now, she was telling me about how much money influencers make on just having YouTube channels. And this woman,
oh my goodness,
she eats crab legs and like seafood and makes over $1 million.
Oh my goodness,
of eating food. And I thought, wow. So
Kera, you know what? I'm glad you mentioned that. I'm glad you mentioned it. One of the things that blew me away was there are people making incredible money on YouTube, eating their food quietly.
Yep.
What they call silent eaters, just sitting there and whispering how they're eating, and then I'm listening to the comments and people saying, "Oh, so relaxing, so soothing." Where are these people coming from? She is eating some noodles.
Yep.
But the way you're picking up the chopsticks or the way the fork is moving in your hand, so relaxing. But this individual had, some 2-3 million views of 5 minutes of her eating noodles and whispering as she's eating the noodles.
And that's her cash flow, extra money she found.
It is amazing. And it's a testament that, once again, there is no limit. If you can dream it, if you can dream it, it's possible at this point. I tell righteous all the time, there's no such thing as a bad idea. It's just bad if you don't try.
Pretty much.
They lay it out there for you.
Mm-hmm. So
we've talked about number 5, and cash flow is number 5. So when we move on to number 6, this is to my heart. Probably it's a little different. I have children, and I know that a lot of the people that are in our community, we have families, and I think as a whole, we're behind some of our other counterparts. And so when we talk about building wealth, to me, that's something that is going to speak to what we have for our kids with our student loan debt and all the other things that we have in there. So when we start talking about wealth, so let me ask you, Righteous, give me some, I don't know, like some ideas of what that looks like when we talk about the threats. I want you to elaborate on that for everybody that's out there watching when it comes to building wealth.
There is, let's see. When it comes to wealth, there's like keys to wealth. I'll say it like that.
Okay.
Now, when it comes to wealth, there's 3 keys. One is the power of compound interest. Albert Einstein said that it's the 8th wonder of the world. He who understands it earns it. He who does not pays it.
Yeah.
And look at it from this standpoint. Okay, you go on the bank. Okay, you have Mr. Jones. Mr. Jones go on the bank. Mr. Jones' bank account is up and down, overdraft fees, things of that nature. What happened is the teller looks at that and said, Mr. Jones, we have these credit cards over here that is 0% interest that you might be able to apply for and get approved for. Mr. Jones said, okay, apply for it. But they don't tell them that the second year, the interest on it is like 20%. Now, you got Mr. Williams that go in the bank. Mr. Williams have a decent bank account. And the teller look at it and said, Mr. Williams, we have a financial advisor that can help you to be able to grow your money. He who understands it earns it. He who does not pays it. Now, we also have the time value of money, meaning using time in order to grow your money. That is when people start putting their money in investment accounts. What they're doing is they're letting time to help them to grow their money. Now, you also have the third one. The third one is the rule of 72. Now, the rule of 72 goes as such. I'm gonna use this example. Okay, let's say if you have a bank account and you're making 1%. Now, we know that the national average of bank accounts is less than 1%, but I'm going to use hypothetically 1%. You take 72 divided by the interest rate, and that tells you the number of years that it takes your money approximately to double. So you take 72, divided by 1, it takes 72 years if you was to put $100 in the bank in order for it to turn to $200. Now, let's say, for example, you take out a loan and the loan is 9%.
Right.
Take 72 divided by 9, that's approximately 8 years. So their money is doubling every 8 years while your money is doubling every 72 years. Now, what me and Anthony do, we help people to use this mathematical formula for their benefit. We help them with certain investment strategies to help them to get higher interest rates to then to be able to use that money in order to grow their money a lot quicker.
Awesome.
Right. And when we're talking about building wealth, there's 2 things or 2 other very important factors we got to pay attention to, right? So the first 2 is understanding how your money grows, right? Or how your money moves. The first way is called fixed. Think of fixed as I don't like using this analogy, but if you go into the hospital and that hot monitor's beep, 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 that means you're still pumping, you're still going. When that bad boy goes boop, that means there's nothing happening no more. That's the end. Well, that's what's going on in the fixed accounts. That's your checking and your savings account. It's not really building a lot of money for you. The savings, the interest rate on your average savings Correct me if I'm wrong on this one, Righteous, but it's less than 1%. We'll just say it's
Yeah.
less than 1% to get an exact figure. So what's happening is your money is doing this in your checking and savings. Every once in a while, it'll go up a little bit. And if you ever notice in one of your savings accounts, you'll have like a little credit of like 75 cents, 65 cents. That's the interest working in your favor.
Mm-hmm.
Now, the other way, the second way your money moves is variable. Now, this is really this is the stock market. You know, why it's very volatile. You know, when the market's going good, you can make money. When the market's doing bad, you can lose money. So we're doing this all day. A lot of this is where your 401ks, 403bs, TSPs, depending on whatever, maybe retirement or investment account you're working with. If it's in some kind of a mutual fund, one way or another, it's probably in a variable account. And that's what's going on. So when the market goes great, awesome. When the market does bad, not so awesome. 2008, prime example. More importantly, most recently,
North Carolina, yeah.
Most recently, we had lots of examples when the market did good and didn't do so good.
Mm-hmm.
The third way your money moves or grows is the index. All right. And a lot of people, I think the index has been there for a while. It's not, a lot of people think this big secret. It's not, it's been there for a while, but it's all about financial literacy. You gotta learn something. And when you learn, you'll see. And with the index, the money, when the market doing good, when the market is doing well, you get to participate in the gains of the market, right? But when the market starts to tank or when it goes down a little bit, your growth gets locked in, and it's called the floor. So it gets locked in. So while everyone is taking a loss, you're locked in at that rate, all right, or at that account value. So when the market does good again, you get to participate in the gains. But if something happens, it goes down, you get locked in while everyone else is taking a loss. Quite a few of our clients reached out to us and just go, I didn't lose anything in this particular product you set me up with. It's the index. He who understands and earns it. He who doesn't pays for it. Now, the next thing is just as important as anything for you to figure out is how your money is taxed. Okay. So just like there's 3 ways your money is moved, your money is generally taxed in those same 3 ways. All right. So you have what's called tax now.
Okay.
So that's your checkings, your savings, money market accounts, bonds, stocks. The reason it's taxed now is the government saying, Uncle Sam is saying, hey, because you get access to this money right now, I need my piece first. Right. As for me giving you access to it now, you give me my piece first. So that's your tax now accounts. Then you have tax later. Tax later is your 401ks, your 403bs, depending on the type of accounts, your IRAs, some annuities, your TSPs, generally your retirement accounts. And Uncle Sam, that our famous uncle, what he's saying is, because I'm going to allow you to grow this in this account tax-free now, I'm not going to charge you taxes now. When you hit retirement and you decide to pull it out, well, that's when I want my piece. And trust me.
Yeah.
Trust me.
Yeah.
And you guys are telling me taxes at one rate now, 30 plus years from now will be higher or lower. You don't have to answer. I promise you it was a rhetorical question. All right. So the question you got to start telling yourself is, do I want to pay taxes on the seed or do I want to pay taxes on the harvest? All right. The final one is tax advantage. And what separates them from this one from the other one is you've actually already paid taxes and you're using your after-tax dollars to invest these accounts. So whether it's a 529 plan, it could be a Roth 401k or a Roth IRA. It could be a IRC 7702, which is also known as cash value life insurance. You're funding that with after-tax dollars. So when Uncle Sam comes and go, the time goes away, you want to take money out, Uncle Sam will say, hey, buddy, don't forget about me. Say, nah, I've already paid you. I paid you on the seed this time, so you can't get any of my harvest, right? Okay. And so in my mindset when it comes to paying taxes is this, right? I pay what's required. I don't want to pay a dime more, and I don't want to pay a dime less. Only what's needed.
Also, I want to add, Anthony, there's 4 threats to a wealth builder that everybody must conquer. Now, The main thing is procrastination.
Mm.
Too many people make excuses why they can't do something. One thing that I say, when it comes to time and money, you spend time and money on things that you want to spend it on. So I don't even take that as an excuse. Like, for example, if I give a person a book and they don't read it, I'm like, why are you procrastinating? Because that book, if you read it fast, you can read it in 45 minutes. If you read it slow, you can read it in an hour and a half. So why are you procrastinating? You can't blame nobody else for your predicament but yourself if people is giving you free education. Right. Then you also have inflation. Inflation is the cost of living. Now, approximately 10 years ago, a drink in a drink machine cost what? 50 to 75 cents. Now it might cost you up to $2.
Right.
That is inflation or the cost of living. When something costs at a lower price at one time, but costs at a higher price now. Then you also have losses. Between 2000 and 2010, the market lost around 50% twice. Then also last year, it also went down to lost about 40%. Now, here's the problem. Now, we know that the money will eventually come back. But however, you have lost the time value of money or being able to use time in order to get your money back. Because if the market loses 50%, the market has to do 100% in order for you to get back to even. Right. We know that the money is going to come back, but you have just lost all of that time in order to get your money back to even. Right. Now, you also have taxes. Like Anthony said, we are aware of sale taxes now, but we don't know what the tax bracket is going to be in the future. So whenever a person is giving you information on helping you with taxes, you should be able to take the advice.
Totally understand that part. Now, finally, we've gone through 6, the number 7. And it's funny that it's last because it almost seems like the hardest for some. Yes. When we start thinking about protecting our wealth, and again, 2020 has been probably one of the most difficult years of my life between loss. And so when we think about protecting our money and estate planning, like what is needed? Like, I want you guys to give me what your plan would be for anyone. If you were sitting in front of someone and you said, I need you to take a look at this, because it's never a happy topic, but it's a necessary topic.
I tell people this. First of all, we don't specialize in this field, but however, we partner with law firms that do. Okay. Now, to answer your question, I think that a person should have a will. To be able to tell people what are their final wishes. You also have you should get notarized a power of attorney document. The reason being because we're in COVID, and you never know when you're going to need to use as far as health is concerned. You already want to have somebody that is appointed in order to make decisions on your behalf if you are in the hospital or you're in a position that you can't make the decisions for yourself. Correct. And then also, I would suggest for a person to set up a trust. In that way that they can be able to properly hand over their estate as legacy. So wills, power of attorney documents, and trusts, I think that when it comes to wealth protection, that is what should be in place.
I agree.
He said it. I have nothing more to add to that one.
Yeah, that's number 7. I can't tell you guys how much I appreciate you taking the time to go through this. And as we were talking about even some of the terminology, the importance of that book, will break it down, but I definitely want you guys to speak with us again, and maybe we can deep dive in each topic so that we can, give a little bit more explanation to some of the differences. I think a lot of us, we've heard the terms before as far as IRAs and stuff, but it's a lot of information. It's a lot that we probably could not cover in just this, past hour, but I want us to make sure that we promise both of you to come back so that we can, pick one by one and start breaking them down to give a little bit more information out there. As always, if anyone has any type of questions, I'm going to make sure. In fact, Righteous and Anthony, if you can go into the my Facebook and put your contact information in there for everyone that's looking. If you guys contact me, I'll be happy because I bug both of them on a regular basis, and I'll put you all in contact because it's that important. It used to be where I think maybe somebody has certain things done. You might have 3 of the 7 that are covered and you still need help with the other 4, just call, because
Right.
it's a whole picture. It's not just the pieces you feel like doing, it's all of them, and they all work together. I have some friends, we laugh all the time about the GoFundMe, pages, which gets under my last skin when we can actually plan this, when we don't have to necessarily use that.
Right.
And if COVID didn't teach us anything, is that there's no discrimination. It doesn't care about how old you are. We just have to be planned, we have to plan all this stuff out so that we're not blindsided. I feel like a lot of people have been blindsided with, I don't think it can happen to me, and as I get older, I start looking at things differently. I mean, I remember I was that person, y'all would laugh at me. I love roller coasters. Like I was a daredevil. And, now at this age, I've seen enough videos of people that fell out. I'm like, yeah, I don't need to do that anymore. So as you get older, you start changing your mindset based on what you thought would never happen and never hurt you. You start to watch, like my daughter now, I can't pay her to watch the news. She could care less about the news, but I have to think about it. I wasn't really watching the news like that either when I was 24. So now, as you get older, don't wait until it's the last minute. And like you guys were saying earlier, it's more expensive. It's totally different for us as you start crossing these the 40s and 50s. So I want
you know what,
people
Kera?
that.
My mentor, he always say, he has a joke, right? And it's funny. Well, it may be funny. All right, he goes, "What's the greatest nation in the world?" Right.
Everyone always going to say us, United States.
It's gonna say United States, right? The United States is the greatest nation in the world.
It's going to say that,
but it's not. The greatest nation of the world, and I think everyone probably lives here. And if they say they don't, they're in denial. It's procrastinating.
Oh, okay.
I won't coin that. I got that from my mentor John Epstein again, but it's so true. One thing I come to realize is that normal is broke. All right. That poverty mindset is become the normal mindset. We don't want to look, guys. Everything we mentioned in here, it's easy to obtain, but not easy to do. So I don't want to make it. I want you guys to be delusional about what we're saying. It's easy to obtain, but you need guidance. The 7 money milestones are a guide to where you want to go. It's a guide to that journey. It's your yellow brick road to financial independence, if you don't mind me saying it that way. But you got to apply it to be successful. This stuff is yours. Prosperity is yours, but it's waiting for you to claim it. We can win. We can win together. And me and Righteous are here to help you. And we're not the only ones. There's so many other people out there that are here to help you and to take your family where you want to go. You just got to let us know when you're ready to get on the train.
Yeah, I'm excited about this. I have so many different testimonies of people that I've watched, and I'm so proud of them. Just learning the basics of credit scores and how they can achieve not having to pay high rates. And I feel like this takes things to another level. So yes, it's great to be a homeowner, but if your house is not protected, then that's a lot of work to put into something and not have the ultimate protection that you can have.
Yes.
So thank you both so much for
There's a thing. We actually have a question in the chat.
Okay.
I think this particular question is more or less for you, Ms. Kera. It says, is there suggestions in getting out of a car loan that is more than your car is worth?
Are there suggestions? that's kind of like that. That's when they say you're upside down. That's when they say that you owe more on your car than what it's worth. Negative equity. Equity is when you have positive money that goes into your next loan. You own it outright. Then you have equity because that trade and that title would go towards the purchase of your new vehicle. When you're upside down, here's the sad part. If you have a contract with a loan, you have to pay that money. And if you're upside down, we have to find a new car, because a lot of people feel like, okay, I just want the car I want and I'm okay with the used car. Depending on how big of a gap of being upside down you are, there's a value that's placed on every single car, and it's going to say this car is worth $20,000. Just because you owe an extra $8,000 on a car and you're upside down, the next loan just can't be $28,000 because that's what you owe. It has to be close to the value, because the bank is only going to loan the value of a car, not what you owe. So new cars are the easiest way, because they give you rebate money, they have incentives, they have discounts and markups that they can bring all of that money down to that figure the bank is willing to loan to. And banks are more aggressive on new cars than they are on used cars. So the rates are usually lower. There's just different benefits to that. But I suggest anyone that's going through that, please reach out and talk to me, because it has to be the right plan. Sometimes I had an example last week where they got her out of negative equity, and now 4 years later, she owes more on the car she bought that day, and they don't make the car anymore. And it never costs that much to begin with. So when you can be upside down and make it worse. So please call me so that we can look at everyone else's, situation is totally different. But the worst thing in the world is to be upside down, take that money, put it on something else, and then pay a high rate, because now you're just doubling it. Every time you make a payment, your payment goes into thin air. So it's a way you can get out of it, but you have to do it the right way, or you'll make a bigger hole than you ever had. And then the
Gotcha.
next thing you know, you'll want somebody to come and steal your car. And so we can't live like that. We just need to plan for it. Kind of like what you were saying. If we plan for it, there's ways to get around it. If we sit down, we go through all the numbers and make sure that you understand everything you sign before you sign it, because these contracts are binding. We can't go back after we figure out we fell in a hole and say, I didn't understand. Your signature means that you understood that day, and that's all that matters in court. So make sure you call.
So pretty much the person needs to reach out to you.
Yeah.
And also anybody that want to want to know more about the 7 money milestones and to put this into practice, call me and Anthony. We have agreed with Miss Kera to that everybody that is watching to be able to sit with people and give them a complimentary financial analysis to be able to help people to evaluate where they're at. And then we could then help to offer a solution to anything they may have, problems they may be having. Because I'm pretty sure that there are some blind spots that most people don't look for that us professionals do. So reach out to us. You can reach out to us through Miss Kera. You can DM her, and she will give you our information or pass your information on to us.
Whatever's easier for you guys. Again, please use this. Everyone knows that for years I've been trying to get people to just call in, and when you say no cost and you're doing something complimentary, people go, for real, you need to do that. And if that goes back to what you said, Anthony, procrastination. If you don't take the time to get information that's going to best serve and help you, it's a world of problems. And unfortunately, you don't even see how much money you're wasting until you sit down with a professional and they show it to you. And then you feel cheated. And you say, I should have did this last year. I should have did this 2 years ago. While I have them in my presence, and they're saying that they're willing to give this to you complimentary, take them up on it, see what it's about for yourself, and then you can help other people. It's very hard to help other people when you don't have yourself straight. So, you know what, I want you guys, and I appreciate you both for offering that.
Thank you. Also, it's time to give away them books that we told you that we was gonna give away. We're gonna give away 3 books. What is the number that you was thinking of, Miss Kera? Because I got a few people in the chat.
You do? Okay.
Yeah.
So 11 is my number. So when y'all play that tomorrow, hopefully they'll be calling you somebody wins Mega Millions and we just playing all that money out. But 11 is my number. That's the Powerball for Wednesday. I'm just telling you now, but 11.
Okay, we got Nicole, Leonardo, Nicole. Her number is 17.
Okay.
She's close to that, so she gets a book.
You're gonna love it, Nicole. You're gonna love this book.
Who is the next? You got another number to give us because you got two
I
more
gotta do
books.
another number. Okay.
Got 2 more books.
What number I want to put out there? And I said to 50. Let's do 42.
42. Alex Reed. She's the close on that, so she get a book.
Lovely.
Got one more.
One more number. Okay. I'm gonna do 25.
Okay,
I got one righteous. Don Frazier.
Oh, Don Frazier.
You got 23.
Okay.
Actually, I got one right on the dot, 25.
Oh, wow.
Veronica Bradford. Matter of fact, I throw in the extra book. So you get.
There we go. We'll throw another one. Don, you get one also.
See, I feel like Oprah today. You get a book and you get a book.
Yeah, so Miss Alex Reed, Veronica Bradford, and Miss Nicole reach out to Miss Kera, and she will then get your books out to you.
I'll make sure of it. Well, you guys, thank you so much. And again, I'm going to be bringing you back. I'm going to be bugging you again because I want a breakdown of each one, because I think that we gave a nice overview today, but I do think that we can do a deep dive in another Monday where we can start, giving people some more specific information and go topic by topic, because there's so much to unpack.
Yes, ma'am. Will do.
Let's let that first topic be the big B word, the budget.
I don't like that word. The budget scares people. Let's call it spending plan.
Oh my goodness.
we want to be, like when someone.
Okay.
But when someone says,
we got spending plan. I'll use spending plan. I like spending plan as well. I like spending plan. Financial blueprint. There we go.
There you go. That blueprint is everything.
Okay, let's do it.
Well, awesome. Thank you both so much. And we will, behind the scenes, y'all, we're going to put this together. And if you have any questions, like I said, inbox me. You share the video. We'd be happy for it. I haven't gotten my cash flow yet where I put this on a YouTube channel, but that's coming, because if they could eat crab legs and make millions, I'm about to do it with some knowledge and information. So
let's do it.
You guys enjoy your week. Happy Martin Luther King birthday. Was Friday, but we celebrated today. It was not for nothing. So I hope that we as a community come together and start having these conversations on a regular basis. So again, thank you both.
Awesome.
Thank you.
Have a good night. Good night, everyone.
Good night.